You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike Tosaw from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster Joe Benazzi from OptionPit.com, and Henry the Flowmaster Schwartz from Cboe. The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of Cboe Global Markets Incorporated or any of its subsidiaries, collectively Cboe. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the Cboe products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That distinct lack of music, at least on the live side, means it's time once again to commence operations here for our bi-weekly options extravaganza, known around the globe as the Option Block. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you folks are mainlining these days. If I sound a little bit different, and I probably do, it's because I'm coming to you not from the Chicago studio, no, but from the Southern studio. Once again, we are down here at the Securities Traders Association, a national conference, kind of checking in on the intersection of securities and options. Options a big deal at this show. It's kind of like a mini OIC as opposed to years past where there was myself and a couple of options people floating around. That was about it. These days, it's very much an options show, which is good to see. Sprinkle a little bit of crypto and some other asset classes in there as well. It's a very interesting show. I already sat down with a bunch of interesting people rotating through the studio. You folks on the Pro are already starting to hear that. Everybody else, you'll be hearing that probably next week, I would think. It's going to start hitting the network. Maybe a little bit this week as well. So stay tuned for all that fun. My usual array of sit downs out there. Of course, if you want to check out the Pro for yourselves, get early access to all this fun stuff that we do. Of course, get Pro Q&As, options oddities, all that fun. theoptionsinsider.com/pro is the place to go. As we go around the horn, see who's joining us today on the program. First, let's go out to the quiet, the sleepy hamlet known as St. Charles, where we are joined once again by the uncleist of Mikes, Mr. Uncle Mike Tosaw. Uncle Mike, welcome back to the show, sir.
Always a pleasure. We're not going to be so sleepy this weekend because St. Charles North versus Batavia is the Chicagoland sports marquee game of the week.
Oh, well, there you go. Game of the week, listeners. So if you got nothing to do this weekend, get on over to St. Charles. You too can check out the game of the week. And also joining us, it's Thursday. That usually means it's time to welcome on the Flowmaster, but he is on assignment. So we are welcoming on in his place a first-timer to the program and indeed to the network. He is Harmeet Goindi, the product strategist at Data and Access Solution Group at the Cboe. Say that 5 times fast. Harmeet, welcome to the program.
Thank you, Mark. Thank you. It's an honor to be here. So just to give you a bit of a background, because this is my first time here, I started my career at Bank of America around the time when Henry was ending his over there. Stayed there for a few years, then had a long short hedge fund based on option analytics, and then joined Henry at TradeAlert. So suffice to say, he is the beauty, and we try to make the brain behind it. So recently, what we have been working on is trying to make sure that whatever information Flowmaster gives you, we can replicate it automatically. And we'll talk about it later, more on that. But the one thing that I would like to just mention today, that yesterday when the Fed had an announcement, we saw about the biggest volume in SPX, about 1 million that happened within 2 minutes. So I think that was a record. And
don't go too crazy into that yet. We'll get there in a second, Harm. We'll get there in a second. But one thing that did strike me, though, you said Henry is the beauty and you're the brains. I'm scared then for the rest of the appearance of the rest of the crew there. If Henry is the beauty. All right, listeners, with the gang assembled, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everyone. Welcome to the Trading Block portion of the show where we break down what the heck is trading. And as Harmeet mentioned there, it was Fed week this week, so a lot on the docket. The Fed decision was just popping off as I was sitting down with our good buddy JJ in the studio here yesterday. So make sure you check out that chat. It was a hot and fresh Fed action on that session there yesterday. Coming into the show today, well, of course, post-Fed, we saw a little bit of mixed bag. We saw, of course, half point. A lot of people were pricing in a quarter of a point. In fact, that's what we asked you folks about a week ago. We did see some wild swings on the Fed watch over the course of the intervening week. It was pricing in about a week ago. We were talking about 75% chance of a 25 basis point cut and only a 25% chance of a 50 basis point cut. Of course, the latter is what we actually got. The markets liked it yesterday, and then not so much because, of course, then there's that, well, maybe things are worse than we thought. So things kind of sold off. Seems like we were looking mixed earlier in the session, and it seems like now, I guess, the bulls have decided that it was good after all, because everything is off to the races. Dow up 1.3%, S&P up nearly 2%, 1.8%, or about exactly 100 handles right now. And NASDAQ up 2.75% out of the gate. So apparently everything is right with the world again, and our old pal small caps, not to be forgotten, up a little over 2% as well. So a hot day after some mixed action. And even earlier today, it seemed like we were going to be looking at perhaps a little bit mixed. So yeah, interesting session out there, listeners. All this a long way around to saying vol is back to coming in. We're at about a 16.75 as we're kicking off the show. That puts us down about 0.75 of a point from the Monday show. And VVIX was still looking frothy. Let's see how we're looking right now as we're kicking off the show. We're at about a 100 even. That puts us down about 10 points from where we were on the Monday show. So a lot to unpack. But Harmeet, you are our guest. You get pride of place. Now you can dive into all that fun SPX goodness and everything else. What caught your eye? Let's start with, what are your thoughts on the Fed? Half a point. I think it surprised a lot of people, maybe others not so much. Where do you fall on that? And then what are your thoughts on what we saw unfolding in the market as a result?
Right. So I think that was a bit surprising, the market reaction. Fed's 50 basis point cut, I think that was expected. People were thinking somewhere between 25 and 50. And the traders I was talking to, right, they said that if it goes to 50, there's going to be a rally, which we did see a little bit, and then there was sudden it tanked down, and I didn't know what was happening. The interesting part was if you look at the long dated bonds, which full disclosure, I owned some. They also didn't do very well. So what was surprising is if market expected something between 25 and 50 basis point, the reaction, which was 50, was unnerving. I think people just didn't know how to react. I think that's what happened. But I think overnight they absorb the news. They understand, okay, this is the 50 basis point is an indication of good economies. We are in solid footing, and it's going to be great from now on. And you're seeing the result today. So I think that's what's really happened. If you look at the volume also, yesterday it wasn't a great day in terms of volume, not all-time records, except for the first 2 minutes after the announcement. We saw 1 million traded. That was a record. But then overall, it wasn't, all-time high. But we see, I think traders just, knew what to do. They came today morning, and now in the morning we saw huge volume. It was on track to be, I think, 70 million early in the day. It has tapered off. We might not hit that record, but I think it's going to be one of the high volume days today. So yeah, I mean, I don't know. What are your thoughts about it? The rate cut, Mark? What do you think?
Yeah, I was in the camp of the 25 basis points camp, but it did seem like a lot of sentiment, especially towards the beginning of the week, end of last week, was starting to shift towards the 50 basis point. It's still interesting to me that they would go that quickly. I mean, I think maybe they heard some of the drum beats of, the Fed waited too long, so that kind of resonates in their ears. It is, of course, an election year after all as well. People say the Fed is supposed to be immune to such things, but they are human. They are politicians. They need to be reapproved at the end of the day. As we keep on rolling, let's go out to the uncleist of Mike's. Mr. Uncle Mike, sir, I'm sure you probably want to say something to our people, so go for it.
Never before in the history of the entire stock market has there ever been a better time to sell than today. New all-time highs today, and wants to keep my compliance people happy. Of course, doesn't necessarily mean that I'm saying you should sell, but I'm just saying that mathematically, with all-time highs, there never has been a better time to sell than today. Historic day, to say the least. It's always exciting when we have new all-time highs in the stock market. And so with it, we're not just making a new all-time high, we're coming in with a bang. I mean, we are up we're up 1.8% today on the SPX, over 100 points. I guess I'm old in the fact that I can remember when 100 points in the Dow was a big deal, but that's not the case anymore. Now if it's 100 points in the S&P, that's a big deal. So we have that happening today, and the bulls are definitely in charge. The bulls are running the show at this stage, and just with everything happening, going through the sectors, technology is up 3. They're the ones that are leading this. Not surprised. Up 3.3% on the day, just looking at the XLK sector. There's some others that are up over 2%, and that we have the consumer discretionaries up above 2, energy above 2, and that's what's leading this. Are those sectors? Russell 2000, it's kind of weird. It's actually kind of in line with the S&P today. It's only up 2.1% on the day. Normally the Russell kind of lives in its own world, but today it's kind of following the S&P. And then some of the names with which we follow, NVIDIA, you pretty much have to watch NVIDIA. That's up over 5% on the day. That's the big one. Apple, of course, just when you think Apple is finally topping out, it comes through today with a 3.7% gain on the day. We have Facebook, aka Meta, whatever you want to call it, up 3.5% on the day. And then the big thing for me that I'm looking at right now is the shiny stuff, silver. Silver is kind of coming back with a vengeance lately. Silver is up over $1 on the day, just looking at SLV, I should say. And what's interesting about silver is that it's kind of like been like Apple in a way, in that when you're seeing, then you think, oh, okay, it's just kind of getting boring. Let's quit watching it. It's not going to have another rally again. And then all of a sudden it's up 4% on the day. Silver is in the low 28s, topped out at the mid 29s back in May. And so I think it's going to be interesting to see if we can make another run at some all-time highs with silver. just because I'm not of the school of thought that I don't necessarily believe that inflation is done, if you will. So I think we could make another run at that. Bonds are relatively flat on the day for the most part, both the corporates as well as the 10-year. Down slightly, but nothing really to write home about. And the thing that I'm going to be watching, not to take too much away from around the block, is just seeing the bond reaction to this. In that the bonds have had a nice little rally lately in terms of the price, but how are we going to react now? The news is out. What's going to happen with the bonds? And the other thing is, we don't have earnings coming up this week or next week or anything like that, or nothing major. We've already had the Fed announcement. So what on earth are we going to watch? As much as it pains me to say it, I think people are going to, and markets are going to start watching. Oh gosh, those two people, what are their names? It's hard for me to even say it. Oh, Harris and Trump. We're going to start watching them and seeing what's happening, because we do have an election coming up in about a month and a half, or actually less than that, I should say. Wow. And seeing where we're going with that. So that's what I'm seeing today. And back to you, Mark.
Uncle Mike, I was thinking of you yesterday because the NASDAQ folks came through the studio and they were all excited about the Monday expirations for SLV and GLD. So I floated to them a little bit. How about we rebrand it Metals Monday? And they were down with that. So what do you think, Uncle Mike? You down for a little Metals Monday?
Oh, I love it.
So maybe we'll get like Metallica involved, Metal Monday. You know, we can go a lot of ways we can go with that.
That is nice. Yeah.
We had the mini metals back in the day, and now we have Metals Monday coming to a trading screen near you. Speaking of the mini metals, I do believe we are joined fashionably late, as always, by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the program to you as well, sir. Mr. Meatball, can you hear me?
Hey, good to be here. Sorry for the technical difficulties. I had a little issue. I guess I had to hop on my phone. I couldn't get it to work on my computer.
Did you not pay the internet bill in Texas again?
I guess not. Market's up 102%. The Nasdaq's up 3%. Apple up almost 4%. Mike's a happy camper. The market is just going straight up. You can't stop it. I think we've got some. What's interesting is if you look at the VIX, right, it's down 1.36 points. It's almost entirely due to the movement in the S&P and almost nothing to do with implied volatility coming down itself. VIX futures are down a little bit, but we continue to see really big moves in the market, daily big, huge moves. I was commenting to this, the average true range of the market on July 9th was 38 points. It's currently standing at about 75. So it's gone up about 100% on a daily basis. We're moving close to 1.5% of the market. So there's still some action flying around. That's what I would say.
Yeah, it's kind of hard for VIX to fall too far when you're popping 1% plus a day, 100 handles in the S&P a day. Hard for it to fall too far, but yeah, if it wants to fall out of bed, hey, by all means, I wouldn't get mad at it. But let's see what we're getting mad at out there. Speaking of you folks out here, really quickly, and talking about the Fed, we were saying earlier, quarter point, half point. We asked you folks a week ago, what do you think would happen if the Fed does as expected? Cuts a quarter of a point. Will it be a strong rally? We finally get the rate cut everybody wanted. Is it not going to be enough? It's going to be a big sell-off. Is it kind of a shrug your shoulder, not much, or something else? A bunch of you chimed in with your something else's, but not much. Took it 41.7%. I guess we need to go re-rack that. Well, we know the answer now, obviously, but I guess we should have changed it to half a point at the time. Big sell-off. A third of you almost, 31.3%. We're expecting a big sell-off if we only got a quarter point. So interesting. Also, we started to get that towards the middle end of the session yesterday. So it was a weird one. 22.9% said yes, finally, strong rally. And 4.2% said other. Well, let's get out to the action out there today. You might be forgiven for expecting kind of a banger day. A lot of volume was kind of sitting on the sidelines earlier this week. Like I said, I was talking to a lot of people through the studio yesterday and into today, and they were all lamenting going into the Fed just what a kind of a dead week it was on the volume front. Nobody was doing anything, which again, that kind of happens when the Fed is in the offing a couple of days down the road. When the Fed is imminent, as they used to say over there on CNBC, it kind of dries up all the paper, and we saw that this week. So as Harmeet implied, it kind of came rushing back with a vengeance in the first minute after the Fed. Today, not so much. Oh, I take that back. It kind of depends where you're looking. Once again, it's very contextual, as it usually is. VIX, for example, doing a heck of a lot of nothing right now. 340,000 contracts on the tape. So I guess they just exhausted all their ammo yesterday. Nothing left to give today. The ADV 950, so back below 1 million contracts a day, but still 950,000 contracts a day. I think most products outside of SPY and the S and a few others would probably kill for that kind of paper. So a 950 is the ADV in the S. SPY, though, SPY is where they're off to the races out there. 5.9 million contracts on the tape already for SPY. Usually, for context, this time of show, we expect around 4 1/3. The ADV is right around 8 million contracts a day, so they might hit that by the end of the show. The S also looking pretty aggressive, 2.15 million contracts on the tape. The ADV just shy of 3 million. And the S, of course, we expect around 1 3/4. So not quite 500,000 more, but looking pretty robust out there as well. Small cap, same deal, 1.03 million. So small caps on the rampage. The ADV 1.4 million. They could hit that by the end of the show as well. And the Qs also off the races. 3 million contracts in the Qs already. 3 million exactly. That's a banger amount of volume for the Qs. Usually 2 1/4 around this time of show. The ADV a little bit shy of 4, about 3.84 million. I don't think they'll get there by the end of the show, but they could come within spitting distance. Now, here's the other question I'm sure a lot of you are asking. Is it a banger single name day out there, listeners? And the answer is, a resounding meh. Top of the list, maybe a little better, but the middle, bottom, not so much. Number 10 gets us to our old pal Microsoft, as Uncle Mike alluded to, off to the races today. 438.38. It's a lot of 38s, listeners. Up 757, or about 1.8%. So Microsoft feeling that post-Fed love. Seems like everybody is. Palantir, 36.87, up about $0.50. This name's already been on the rampage. How much is it up over the last month? 13.5%. And yeah, 13.5% just in the last month. So Palantir's been on the run and continuing that today. Peter Thiel and Ilk will be happy out there. 36.88 for Palantir. Number 9, 259,000 contracts. Number 8 is the Amazonians. Interesting, though, we don't have our little tech swath, the A tech swath together like we usually do. Number 8, Amazon, 189.12, up about 270, or right around 1.5%. Again, good for 8, 322,000 contracts. Number 7, our old pal SoFi. They've been a frequent offender of late in the top 10. 840 today, up about 30 cents, or about 3.6%. So they're popping pretty hard out there in SoFi land as well. Number 7 for them, 390,000 contracts. Number 6, the artist formerly known as Facebook. It's Meta, 557.5, up about 19.5. My goodness, 3.6%. 19.5 handles for Meta. It wasn't that long ago. I was hanging out around 100, listeners. 19.5 for Meta. Good for number 6, 410,000 contracts. Number 5, my old stomping grounds back in the top 10. It's Intel, 21.5, up about 70 cents, or about 3.3%. Good for number 5, 414,000 contracts. Number 4, here's our little A tech swath. It's AMD, number 4, 450,000 contracts, trading 158 and about a half, up a little over 10 handles, about 10.20, or nearly 7%. So AMD popping hard out there today. The fruit company, number 3, Uncle Mike already talking about them, 228.90, up 8 1/4, nearly 4%, almost 1 1/4 million contracts. It's been a while. Probably Apple earnings the last time we saw Apple putting up 1 million contracts. So, man, Apple. That's interesting because the new iPhone kind of landed with the thud. They kind of came for the stock last week, and then just, I guess, all that's behind us. We hate the iPhone. No one likes the camera button. Where's Steve Jobs when you need him? But let's buy the stock up 4% today. One of those days, listeners. Number 2 is the fruit company. I said that already. Number 2 is Tesla. 243 1/3, up 16.13, a little over 7%. So popping hard in Tesla land. 1.83 million contracts and the number 2 spot. And you know what the big dog is today? Let's see. The question is, how big is it, listeners? NVIDIA, 2.8 million contracts. So for NVIDIA, it's actually kind of light. Let's just re-rack it here really quickly and see if maybe they put up any more paper. in the last few minutes? And the answer is no, about 2.86. So not much going up in NVIDIA out there today, even though it is moving up 611 or about 5%, trading right around 119 and a half. Let's see anything else lighting up our tape. We already talked in the past about earnings season. It's pretty much winding down now, listeners. Again, I know the Meatball, though. He's pretty excited about Darden Restaurants today before the bell, as well as Cracker Barrel, the man. He is in Texas now. I think Cracker Barrel, the national chain of Texas, along with Texas Roadhouse. Then we got FedEx after the bell and a few others out there. So there still are some names to keep an eye on. But for the most part, earnings season is behind us. The season right now hanging out at 124%. So fully 11 points above our long-term average of 113%. So that's fairly impressive. If you want a couple to still keep your eye on, FedEx today after the bell, 298.17 is where they were trading when we ran these numbers. They were pricing 2040 as their straddle. In the past, they moved 2016. So pretty much exactly in line with what they've done in the past. Let's go out a little bit, though. Let's go out next week. And there still are some tech names to keep an eye on, including the old school ones. Micron, 25th after the bell, 87 and a third is where they were trading. Get this, they were pricing in 7 3/4. In the past, they've moved about $5. So about 2 3/4 worth of extra juice in Micron. So interesting. Everything old is clearly hot and new again. Let's see if we find some hot and new activity to discuss with you folks, listeners, because it is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Time to get weird. Time to get wild. Time to kick off the Odd Block. And this is usually where we unleash the Flow Master, and he's got some funky or esoteric trades that he likes to share with us, or just as in the case of last week, just outright dubious trades that he wanted to share with us. But Harmeet, you are in the hot seat this week, sir. Any interesting trades come across your radar, sir?
Well, yes, it's good. Interesting that you brought it up. So one thing I saw today, right? There's this company called NOV, and it has this big trade, big block today. It was a 10,000 lot of call, Jan 25, 20 strike call. And then, we see a lot of unusual activity in the call price there and call volume there. And I wasn't sure what's happening there. Now, it's a gas company. So then I went and looked into it further. And that's not the only place where we are seeing activity. There is this similar company called SMH, and they had a big call spread flex today. In the morning. So I'm trying to figure out what is. They both are in gas space, and it seems like people are thinking about a relatively high usage of gas in this coming winter. So it's supposed to be. I think people are thinking it's going to be a very cold winter. That's the only sense I'm getting here. But I don't know. Have you seen anything happening in gas space recently?
Well, nat gas has been quite the mover and shaker of late. In fact, if folks listen to our TWIFO show, they'll know that we talk about nat gas almost without fail every week. It seems like it is one of the largest percentage movers week in, week out. Some of that, of course, has to do with the fact that it's a sub $3 underlying, so it's easy to move 12, 15% in a week. But also, there is commensurate options volume out there. We talk about it a lot every week, well over 500,000 contracts going up in the actual nat gas options, and of course commensurate products like Boyle and others do some paper out there as well. By the way, that ticker, listeners, is NOV, NOV. It stands for NOV Inc. This was formerly National Oil Well Varco, American oil company and gas company out of Houston, trading about $17 today, up about half a buck. On the year, it's been more of a tumultuous year. As you've seen, there's been some pressure in the energy sector of late. Nova was trading about a year ago at about $20, $20.50. And then they sold off about $3.50 now, a little bit shy of 17. So they're down about 16, almost 17% on the year. It's been a bit of a rough run out there. Even though they're not at their low for the year right now, they got to their low for the year. Looks like back about last week on September 11th, an inauspicious day if ever there was one. 1547 is where they got down to. So just in the last week, they've had a nice little run up about $1.50. And it does seem like, looking at the paper that Harmeet was talking about, it was a block of 10,000 of the Jan 20s going up for 40 cents, lifting the offer. That is a 34 vol, listeners. The stock was a little bit lower, actually, 1673 when these went up. So they've already caught a little bit of a lift in the underlying. I'm sure they're not upset about that. If you are wondering, there are going to be earnings probably between now and January. They are in late October, looks like October 24th. So they do get one earnings cycle. You can maybe, with that length of time, maybe squeeze in two if earnings were coming up pretty soon. You can get another one again, but it doesn't seem like it. Only get one announcement in that cycle. So 10,000 lot, 40 cents. This stock has been on, well, it's been on a bit of a tear over the last week, but outside of that, the last year it's been kind of rough. I don't know, Mr. Meatball, reaching for the Jan 20 calls, paying about a 34 vol, 40 cents for these bad boys for a stock that's been pretty beat up. It seems a wee bit optimistic. What do you think? You like these, sir?
Generally I like to go a little closer on some of these, but you only live once, so take your shots. Maybe it's a hedge against a short. You never know. Someone just it does seem like someone's got a little hopium here.
A little bit of hopium indeed, listeners. As we keep on rolling, let's see what else we've got on our docket today that our Eye of Sauron can find for us. Let's go out to an interesting name. I'm not sure if we've talked about the spinoff of this name, but we've never really talked about this name, at least not in a long time here on the network. This is Endeavor. You might know them, listeners. They're the talent agency, the former owners of the UFC and I think professional bull riding as well before they spun off. At least the UFC made that combined joint entity called TKO with WWE. But Endeavor itself, still a going concern out there. Probably makes sense to separate a talent agency and some of their other businesses from things like combat sports. But Endeavor, ticker symbol EDR, listeners, trading right now, 2766, easy for me to say. Kind of unched on the day today, so not a banger day for them. Let's see on the year. It's kind of obviously with a lot of corporate actions. There was some private equity action out with them towards the end of last year as well. So there's been some interesting stuff afoot out there. So on the year, they're still up though. They're up 5 1/3, or about 23, almost 24%. They crushed it down to its low right around Halloween last year of 1765. That was with all that kerfuffle, I think, with the private equity. That's also when Vince was crushing his shares of TKO, and obviously the market was taking a beating then as well. So kind of an interesting time frame. Ever since then, they shot back up. They were at about 22, almost $23 end of October 27th, and they've kind of been moving steadily upward pretty much all year ever since. So Endeavor 27.66 right now. What do we spot out here? Looks like somebody is betting that we're probably going to be hanging out in this range for a while, but if in case the worm does start to turn, they're coming in for a little bit of hedge. 25,000 of the Jan 25 puts, paying 25 cents, expiring in 2025. So lots of 25s in this trade, listeners. They said, how are these puts? They got no bid at a quarter. That's a fantastic market. No bid for these puts. They refused to pay even a nickel for these puts. No bid at a quarter. They said, fine, we'll pay a quarter. We want to buy 25,000. The stock was right about here, 27.64. So the stock hasn't really budged off this trade. This is obviously an underlying holder doing a little bit of the old hedgeroo here. There are earnings coming up on the 7th of November, so in a couple of months. So they're buying a fair amount of time, all things considered, for not an enormous outlay. So I guess if they have been riding this trade for a bit and they're worried about a little bit of a retracement going into the end of the year and going through earnings, they get all the way through January for a quarter. So I suppose in terms of duration alone, it's not the worst trade we've seen. Harmeet, any thoughts on these Endeavor, a little bit longer term puts?
All I can say about this is I love the trend. 25,000, Jan 25 puts at 25 cents. I think someone is doing numerology here, and I think they're betting on 25. That's what I can think of.
I think they played 25 in the Powerball too, just
Exactly.
going all in on 25. So someone told me the other day the numbers, I'm not sure if it's Powerball or what it was, came in at 6, 7, 8, 9, 10. So there you go. So apparently, if you're working the numbers out there, listeners, you're doing well. Mr. Meatball, not the sexiest things, but sometimes you got to hedge a bunch of stock with some Jan puts. So what are your thoughts, sir?
Well, the interesting thing is the open interest is 23,000, Mark. So, I'm wondering, but
You think
most
they're
of
getting the heck out of Dodge?
Yeah, I don't know. Most of the volume looks like it went up 15 cents, 20 cents. So I don't know exactly what's going on here. It probably is a stock hedge, but it's just a little strange. I need to see what it's definitely a buy, but and they've done, they did 25,000 in one clip, then they bought another 3,000 of them. I'm interested to just kind of see what the ending story ends up being here on these. Whether they are whether it's an open or a close. I think it might be an open, but it is curious that there's that open interest there already.
Looks like they started buying them back.
It is opening.
Oh, there you
sorry,
go.
I was just looking at the thing.
That's good. Yeah, see, you're subbing in for the Flow Master. You got to do stuff like this. That's part of the job description. But yeah, it looks like they started opening them back in June 13th. They put up a block of 10,000 when the stock was not that far from here, 26.86. They paid 25 cents again. Again, they got no bid at 35 cents. So the markets on these puts continue to be atrocious. But 25 cents is clearly their level. So they bought them back in June for 25 cents as well. So they're able to get a lot of time for that 25 cents. So clearly that's their level. I guess they've been adding and nibbling ever since then. They picked up, looks like a few thousand more back on September 11th. So they've been slowly adding to this position. Then today they decided go big or go home, 25,000 more here. You like these puts, listeners? I like the duration. I liked it even better if you bought them for 25 cents in June. You're getting a lot of time then, half a year to work with out there. You don't see those too often for 25 cents. But then again, Endeavor's been tied up in some corporate action, so maybe the desire for some of these puts not as strong. Since we're talking Endeavor, let's get out of this segment going to the other half, the former other half, maybe the better half of Endeavor. As I was just talking about, they spun off maybe the sexier part of their business, UFC, merged it with WWE in a very weird deal. Still kind of surprising to me. UFC being the senior partner in that deal, even though market cap wise, they were the smaller entity. There was a lot going on. The McMahon shenanigans were going around then as well. That was one of the reasons that deal was done the way it was done that way. I think they kind of took them to the cleaners a little bit, but either way, we have this new combined entity known as TKO Group Holdings, trading 123.78, up about $1.33 today. They've had a decent year as well. A year ago, they were $105, and not that long after the deal. Then Vince started crushing it in a just fit of petulant frenzy, crushed the stock all the way down to $73, massive sales. Then they started to rally ever since then. There was some corporate action. I forgot what they did exactly with the private equity group out there to, I think, take a piece of what was left or whatever it was. They kind of added some of the valuation juice out here, and they've been pretty much mostly up ever since. On the year, though, because they were still trading 105 a year ago, they're net only up about 17%. If you go back to that, Vince Nader, though, of around 72, 73, then obviously they're up about $50 from there. So it's been a better run from there. And what did we talk about with them last? It was back on the July 15th show, listeners. We talked about somebody coming in and liking themselves a little bit of upside in TKO. You might think, well, they probably knocked it out of the park. This chart's been pretty good. Not explosive, but it's been good. They bought 2,498 of the AUG 115s. They paid $1.79 when the stock was 107. So pretty much they needed about $8 in the stock, plus a couple extra, obviously, to cover their calls. And this was on July 15th. There were earnings on August 8th. So they got earnings baked into the price of that. Now, they paid a lot, nearly $2 for these calls, but at least they got earnings. They gave them a little bit of an extra catalyst to move this thing. And this one has to be, in terms of payoff, one of the stranger ones that we've seen. Because I said they paid $1.79 for these calls, listeners. And the stock on expiration, listener, they were still open. The stock on expiration went out. I don't think we've seen this before. 116.79. So they exactly broke even on this trade. They paid $1.79 for the 115 calls. Stock went out 116.79. I don't know, Harmeet. We don't see that too often, or really ever here on this network. That people buy calls, they ride them all the way to the end, and the stock goes out literally exactly at their break even. Sir, what do you think?
I think someone was extremely lucky. That's all I can say. These things happen, but as you said, right, hardly ever see it, and it's just riding their luck out.
Mr. Meatball, we've been talking paper for a while, but we've never seen anyone get an exact bullseye like this before. What are your thoughts?
Way to go. Nice job. I mean, sun shines. Excellent work. Sometimes you get the bear, and sometimes the bear gets you, and they got the bear this time.
Yeah, if they're still long that stock that they got now for their exact break-even price, then they're probably not too angry about it as well. You know what we're never angry about, listeners? It's your mail. So let's get to it. A little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, let's get to it. Listeners, let's get to the mail block. Before we get to your questions, let's get to some of your thoughts on our question of the week. We were talking Fed last week. This week, we're going out into another alternative realm, this time into the land of Bitcoin, a.k.a. Uncle Mike's favorite place to hang out. It's been a point of contention for a while. It's kind of resurfacing again, this whole notion of what the heck is Bitcoin? Bitcoin has lived many lives, we said on Monday, over the past decade. We now have quite a bit of data, though, under our belts, but the debate continues to rage. What role does Bitcoin really play in a portfolio? Is it, the old saw? Is it digital gold? Is it just another uncorrelated asset class you want to throw into your portfolio? Is it just another tech stock because it moves in lockstep with those sometimes, or other? Mr. Uncle Mike, as our resident Bitcoin aficionado, we'll start with you. I know where your vote falls. But where do you think our audience is voting? They like digital gold? They going uncorrelated, tech stock, or other?
I would say uncorrelated. If I did think it was a legitimate asset, which I do not, that's how I would view it. And I think that's how our audience is viewing it.
Uncle Mike votes for the illegitimate asset. That's what he votes for in our poll. Harmeet, I know obviously you have a digital arm over there at Cboe. Where do you fall on the whole Bitcoin thing? Are you a fan? Are you not a fan? And then B, what role do you think, looking at the numbers, where does it fit in a portfolio, sir?
So I am a fan of Bitcoin and digital currency, have been ever since inception. And I think it fits in. Digital gold would be the closest, gold would be the closest thing that I would call it. It's a hedge against inflation, against uncertainty. And, oftentimes, especially when you saw the run-up, it was a proxy for VC funding and tech run-up. So I get that. But in the end, it is a store of value, right? I mean, what makes gold so valuable? It's just us deciding it has value. Similarly, what makes Bitcoin so valuable? It's people who think, and not everyone agrees, I get it. But I think that's where it places. And it is something you should always have in your portfolio to keep, track of, keep hedge against inflation and the market's movement.
Oh, Uncle Mike, those are fighting words. Harmeet is meeting you at the horse after the show. It is Bitcoin versus non-Bitcoin here on the show. So Harmeet, you weren't dissuaded by the period where we saw rampant inflation and Bitcoin not really outperforming. That didn't make you think twice about Bitcoin as an inflation hedge?
No, it did not, right? So you have to remember Bitcoin crypto market, right? And when I say Bitcoin, I also mean other things, other level 1 coins like Ethereum and Solana. They are all 24/7 market, right? And if you look at our market, it's not. It's 6.5 hours a day, 5 days a week. So the cycles you see in Bitcoin is 2, 3, 4 times faster because the market is 2, 3, 4 times longer than our market. And so there is some correlation, but if you want to see Bitcoin, all you need to do is expand. So when you're looking at let's say 1 year for stocks, look at 3 3 months for Bitcoin, and then compare the chart. And then you can see the trends that you see. There is a bull cycle, bear cycle. It follows its own cycle, and therefore it's uncorrelated. Having said that, right, you see MicroStrategy and other people piling in their money into it, so you will see some spillover effect. But on a long-term trend, I think it's secular. It's its own market and uncoupled from our markets.
Interesting. So we have a vehemently anti-Bitcoin voice on one side. We've got Harmeet talking pro on the other side. Mr. Meatball, you get to be the deciding factor, sir. What is your vote? And then where do you think our audience is voting in our poll? A digital gold? Is it uncorrelated, another tech stock, or other, sir?
I would say it's other. I do think it has become an asset class. I think it's certainly not digital gold. It's shown to have some loose correlation to the overall market, but not exactly. So it's an asset class, but to say it's uncorrelated would be incorrect. To say it's correlated to gold would also be incorrect. But it kind of has its own market. I would throw it out with kind of any other soft commodity or something of that like. So is it worth investigating and exploring and trading in? Probably. Is it something that you should use as a replacement for a precious metal? Probably not.
All right, let's see what our audience has to say. You folks, at the end of the day, listeners, are the ultimate arbiters of all of this. Looks like you're having a hard time choosing as well. Just like our panelists here today, we have a tie between uncorrelated asset class and just another tech stock. Both of them exactly at a third right now, just ticking as we're talking here on the show. And then we have it's digital gold coming in 25.6% for number 2, and then other 7.7%. We got a lot of fun others, including it's a lottery ticket, or I should say a bad retirement plan lottery ticket out here. Vernon Griffin saying that, and then we have our buddy Age of Del Aquarius on the pro side saying it's other, basically a meme stock. So I could certainly see how some people would think that. So that's where we're shaking out right now. You got about a day left at Options, the place to go to make your voice heard. Listeners, let's keep rolling. Let's go out here. Well, the Flow Master would have liked this one if he was on the show today. I guess, Harmeet, you get to sub in. This question comes from JMC Kib. JMC Kib 4. He says, do you see flex options or OTC options the future of the options market? The future.
Boy.
Wow. I don't know. That is right up your alley. So I'll let you.
No,
I have some thoughts.
Master's alley. He's the
yes, he is.
Yeah, but I would sub for him. I would try to channel my inner Henry. So yes, flex. It has its advantages. We think it's great. It is the future in the sense that if you look at the average volume in flex, it's on the upswing. In fact, today earlier today we talked about NOV, right? NOV. There is a correlated name, SWN, right? Southern Western, whatever it's called. It's an energy company, and Southwestern Energy Co. And there was a similar call spread today, a 50,000 call spread that was a flex. So that is why I was thinking when I saw it NOV, I thought maybe there is a correlation here. They both are gas names, but you don't see it if you are not looking at the flex market. So you miss half the information. Biggest name like Nvidia and SoFi, if you look at the volume, most of it is, a lot of it is happening in flexes. So flexes is something that people should look into it, especially when you're trying to come up with strategies, trying to figure out what really is happening in the market. And, it gives you the flexibility that you don't get with listed, right? For example, European option, right? Not, cash settled option, your own strike, your own expiry. And it's the best part is it's, OCC cleared. So you don't have that risk either. So I think that's the future. And we, if you want any information on flexes, go to our website, and we have all the tools you need to figure out the volatility, the flow analytics, etc. And you can also look into our Cboe Insights, where Henry talks about it a lot on LinkedIn also.
He does. Yes, he did mention his big blog post recently about on Cboe Insights, all about Flex. So if you want to check it out, some great visuals there, listeners. Henry's always known for a good graph or two. So there you go, Harmeet. An excellent job standing in for the Flow Master, talking about one of his favorite topics, Flex. Now you just got to talk about nanos and a few other things, and you'll have your Flow Master impression down pat. As we keep going with the show, listeners, it's time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right. Welcome to Around the Block, the portion of the show where we talk about what we're keeping an eye on until our next episode on Monday. Mr. Uncle Mike, we shall start with you, sir. What are you keeping an eye on? Now that the Fed's in the rearview mirror, what's in the front mirror for you, sir?
Well, I think bonds need to be... We need to focus on that, seeing where that's at. Also watching the VIX in that we have expiration Friday tomorrow, and looking to put in some hedges on the larger portfolios for the next expiration cycle. So watching that as well. It's always nice to roll your puts every month when the markets are at all-time highs. So hopefully this will continue for tomorrow.
I guess the front mirror would be more of the windshield. So what's in the windshield for you, Uncle Mike? As we keep on rolling, Mr. Meatball, same question for you. The Fed in the rear view mirror. What are you keeping a firm gaze on through the windshield for the next show, sir?
Well, we've got quadruple witching tomorrow, which I think is going to be interesting. I think we're set up for potentially another big up day on Friday. And then with all that paper coming off, it'll be interesting to see what, the last week, what next week looks like, and everything happening there. I would imagine, I would not be surprised if next week was a little bit soft.
This week started off soft, and it's looks like so far wrapping up with a bang. We'll see what tomorrow holds in store for us. Harmeet, the last word is yours. And by the way, it sounds like the Flow Master is listening along live, and he approves of your discussion of Flex. So there you go. You have the tacit approval of the Flow Master, sir. Well done.
That's good to know. Good to know. And since he's here, I won't talk about what he talks about, but we know what I'm going to talk about. I'm going to talk about the Ether and Bitcoin ETFs. I think that's the one thing I would like to watch, once, after the Fed announcement. Like, I want to see where the wall is. I would like to watch the wall and the volumes of the ETFs that are on Bitcoin and ETF. And I think you're going to see a lot of action there. So I'm talking to a few traders, and they are, watching wall, trying to sell it. And I think something to keep an eye on. Whether you're a believer of digital gold or meme stock, whatever you want to call it, the fact is the market is big. There's volatility there, and you should be keeping an eye on it and trading it.
At the end of the day, there's volume and volatility, the only two things that options traders really need, right? Speaking of options on Bitcoin, I've been asking those questions again. I know a lot of you folks want to know what's up with the options on the Bitcoin ETFs. So far, not much, but it seems like some people are still optimistic we might see them before the end of the year. So that would certainly be an intriguing development, to say the least. But that is going to do it for us on the old option block today. Never fear if you need more in your lives. I'll be back in a little bit from the Southern studio to hold court on all things futures options with our friends over there on CME Land. Should be fun. Remember, stay tuned to the network feed for all of the fun content coming to you from the STA conference this week. If you're on the pro side, that's already starting to hit you folks. If you want to get access to all that goodness, and of course pro Q&As, and of course options oddities, and of course live streams and giveaways, man, it's almost time to start thinking about giving away the SEP Pro Trading Crate. Only one place to go. TheOptionsInsider.com/pro is the place to go. And Harmeet, you did an able job standing in for the Flow Master. If folks want to check out what you and the rest of the team over there at Cboe Data and Access Solutions have in store, where should they go? What should they do?
Cboe.com/RMA, which stands for Listed Market Analytics. And then, of course, you can look. You should definitely subscribe to Henry's Insights on LinkedIn and our website.
There you go, Cboe.com/RMA. And Mr. Uncle Mike, same question for you. If folks want to check out all the legion of webinars you're doing, where should they go? What should they do?
Go to my Twitter handle at Mike Tosaw. Follow me on Twitter, and then I have a pretty big library of webinars built up over at Adaptive. So adaptivewebinars.com.
Webinars.com, the place to go for all the Uncle Mike goodness. And last but not least, Mr. Meatball, sir, if folks want to get their diploma from the ivy-covered halls of Option Pit U, where should they go? What should they do?
Well, you know what? Follow me on Twitter at Option Pit. We've got an event coming up today at 4:30 p.m. Eastern Time. Should be fun. You can go out and catch the replay at the same link that I'm going to be tweeting out. So come and check it out.
Well, today, if you're in the live listeners, head on over there. Of course, if you're listening on the podcast after the fact, check out the archive. It'll be waiting there for you as well. That is going to do it for us on the show today. Back again in a little bit. No rest for my voice, listeners. The producers hate me as I'm back once again from the Southern Studio for a little bit of TWIFO action. Back again tomorrow. We'll be beaming in from the Southern Studio once again for volatility views. And then one final time for the week, exclusively for our pro folks, I'll be back talking a little bit of unusual activity for options oddities. Then we all get a rest. I get to head back to Chi-Town. We'll be back again on Monday, another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of Cboe Global Markets Incorporated or any of its subsidiaries, collectively Cboe. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the Cboe products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.